Ever wonder how investment bankers make money? When you hear investment banker, you might picture luxury suits, huge bonuses, and scenes straight out of The Wolf of Wall Street. But behind the glamour and the chaos, there's a real business model. And it's a lot more structured than throwing phones and partying on yachts. In this video, we break down exactly how investment bankers generate revenue, how the banks they work for earn billions in fees, how bankers themselves get paid, and why clients are willing to shell out so much for their services. Whether you're curious about the job, the money, or the real story behind the headlines, this is the breakdown Hollywood never gave you. But first, do me a quick favor, hit that like button, subscribe to the channel, and turn on notifications so you never miss valuable career insights. All right, so before we talk about money, let's clarify one crucial question. What exactly do investment banks do? They're not regular banks. They don't take deposits. You're not opening a savings account at Goldman Sachs. Instead, investment banks provide high-level financial services to corporations, governments, and institutions. Here's what that looks like. They help companies raise capital through initial public offerings or IPOs or bond issuances. They advise on mergers and acquisitions. Think big deals like Amazon's acquisition of MGM. They trade stocks, bonds, and derivatives to generate profits or manage risk. And they manage billions in client assets through their investment arms. In short, investment banks facilitate the movement of money at scale. And for that, they get paid handsomely. Now that we understand what investment banks do, let's discuss how they generate revenue. Most of their revenue comes from a few key services, and each one involves big clients, big numbers, and even bigger fees. First, let's consider mergers and acquisitions. Investment banks act as advisors when one company buys another. They analyze deals, negotiate terms, and guide the process. In return, they charge a percentage of the total deal value, often 1 to 2% on multi-billion-dollar transactions. That might sound small, but on a $10 billion deal, that's $100 to $200 million in fees for a single project. Secondly, let's take a look at the underwriting of IPOs and debt. When a company goes public or issues bonds, an investment bank underwrites the offering, meaning it buys the shares or debt first, then sells them to investors. They take on the risk, so they charge a hefty underwriting fee, usually between 4 and 7% of the offering. For a $1 billion IPO, the bank could walk away with $40 to $70 million in fees alone. Third, we have trading and sales. Some investment banks also generate revenue by buying and selling securities, stocks, bonds, derivatives, on behalf of clients or for themselves. They earn profits through spreads, commissions, and proprietary trading. This can be volatile, but also highly profitable, especially for global banks with high trading volume. Fourth, we have asset management. Many investment banks have wealth management divisions that manage billions in client assets. They generate consistent revenue through management fees, typically a percentage of assets under management, often around 1% annually. For example, managing $100 billion would yield $1 billion in recurring income. So, in short, investment banks make money by facilitating deals, moving capital, and managing financial risk. And they charge clients large sums for their expertise, access, and execution. Now that we've explained how investment banks make money, it's time to answer the big question. How do bankers themselves get paid, and why are their bonuses so huge? We've seen how investment banks pull in millions or even billions through deals, trading, and asset management. But how do the bankers themselves get a slice of that? It starts with the base salary, which is already high. An entry-level analyst at a major bank might earn $100,000 to $120,000 per year, while associates and VPs earn significantly more. But the real money comes from bonuses, often equal to or even greater than the base salary. These bonuses are usually tied to performance, both personal and team-wide. Close a big deal? Work on a major IPO? Your bonus reflects that. At the top of the ladder, managing directors and partners can earn 7-figure compensation packages. Some earn millions a year, especially if they bring in major clients or lead high-fee transactions. That's why you'll often hear phrases like, "You eat what you kill." At senior levels, your bonus is directly tied to the revenue you generate for the firm. That's also why investment banking is such a high-pressure environment. The stakes are high, the hours are long, but the potential rewards are massive. Now, you might wonder, why do companies pay investment banks such huge fees in the first place? Why would a business shell out millions just for advice or help raising money? The answer comes down to expertise, access, and execution. Investment banks offer specialized knowledge, from valuing companies to structuring deals and navigating complex regulations. In high-stakes situations like mergers or IPOs, having the proper guidance can make or save a company billions. Then there's access. Banks have deep relationships with global investors, institutional clients, and regulatory bodies. They open doors that most companies simply cannot. And finally, execution. When millions are at stake, companies want certainty. Investment banks have the teams, tools, and experience to get the job done, fast, efficiently, and at scale. To put it simply, clients pay big fees because the cost of getting it wrong is even higher. So, now you know, investment banks make money by moving capital, closing complex deals, and managing enormous financial risk, and they get paid handsomely for it. And the bankers? They're rewarded with high base salaries, performance-based bonuses, and the kind of career path that, while intense, can be incredibly lucrative. But behind every big paycheck is a genuine skill: valuation, strategy, communication, and execution. If you're thinking, that sounds like the career for me, then you're in the right place. At 365 Financial Analyst, we've built a complete investment banker career track designed to teach you everything from financial modeling in Excel to valuation and deal making. So if you're ready to take the next step, click the link in the description to start learning for free. And as always, if you've learned something new today, don't forget to like, subscribe, and stay tuned for more career-focused finance content. Thanks for watching. We'll see you in the next video.